party this evening. I was busy with show prep here, and what I want to take a look at today are obviously the opening futures action. We're going to talk about Meta. I want to do a flashback in time on Meta. I want to go back to the live stream I did on Thursday night. I'm going to show you an example of why you need to be very, very careful with these earnings trades on no matter what stock you trade. Because as the adage goes, all stocks are speculative. It doesn't matter if it's a mega cap, large cap stock. It doesn't matter. All stocks are speculative because many option buyers, option sellers had their faces ripped off on Meta on Friday. Luckily, I was not one of them. So we're gonna show you using the example I went over on Friday night of a call spread. What would have happened by the end of business on Friday to that call spread had I put the trade on before earnings on Meta? We're going to talk about the events going over in the EU, the protests over there, very briefly, an update, kind of some good news there. And we're going to go over earnings action going into the new trading week. And of course, we'll do some stock chart requests. So let's get to it. Let's say hello to folks. And I will share my screen. Sean, welcome. I'm really overdue here. I'm late. Jody, good evening. Pete. There she is. Jody, welcome. Paul, good evening to you. Thank you, Seymour Rivers. Thank you for that. Thank you for being here. Jeff, hello. Danny, welcome. Mr. Jeff, welcome. Okay, let me share my screen. Let's talk about the opening price action here on the E-minis. And we're also going to talk about that jobs data. I smelled BS when they released it, and sure enough, I've been proven right. We're going to go over that in a moment. Okay, so we have the futures that are open. These are the E-minis, in essence, flat. This is a daily chart. Let's slim it down. Let's go to a 5-minute view and see how they opened it. They opened it flat, not much movement here at the open. Very thin trade. Let's check out the NQ. That's the NASDAQ 100. I'll get it right eventually. I'll get it right eventually. There we go. NASDAQ 100 down fractionally off of its lows. It is, though. So we open lower, rallying back. The question is, do we move higher or do we fail and begin to move lower? I know I spelled high wrong, but what happened here? Let's try that again. All right, now I spelled it right. Let's see whether or not we take out the session lows. Not a lot of conviction here in either direction at the open. Let's take a look at the Russell 2000. The Russell down as well, but like with the NQ off of its lows, trying to recapture some moving averages, and it is struggling a bit here at the open. Let's. I just really care about lower lows here. Okay, those are equities. Let's check in with currencies really quick. The dollar, wow, You don't usually see this on a Sunday night, a big move in either direction on the dollar. Usually the dollar is kind of flat with the activity going on in the euro and the yen, but not tonight. And this is more piggybacking off of that jobs data that came out on Friday. Again, I'm going to go to a video in a moment. It's going to explain to you how that data was manipulated. So the dollar very strong here at the open. My guess is that by tomorrow morning, this will have lost some steam. This is a very, very powerful move here. And my hunch is that the response with gold and silver is that they're probably down. But before we go to them, let's check out the euro is falling out of bed. Really, really hammered. On a weekly chart last week, you saw a bearish key reversal bar on the euro. That's one of my top 5 favorite candlestick patterns. There's a link below to my 5-part video tutorial, free. My top 5 favorite candlestick patterns. That is one of them. In fact, this is a bearish key reversal. It implies that there are sellers above, and we haven't hit support yet. So it looks as though this is not going to be a good opening for the week for the euro. Here's the 5-minute view. Let's check out the yen. Sorry about that noise. Maybe I could show up my volume here. The yen is down as well, measurably. And it looks as though it's sinking lower. And we already have new weekly lower lows here. We bounced off the lows of the session. That current, we're still below last week's lows on the euro. I'm sorry, yen. So the dollar starting off very, very strong here with its counterparties behaving very, very poorly. Let's check in with gold, and then we'll check out silver. That is not gold. Gold is actually up. And normally I would say I find this surprising, but tonight I don't. And I'll tell you why in a moment. And this is actually looking bullish. We may be off of the highs of the session, but I'll do this. I'll take my crayon out, draw a higher low. And I'm not going to be surprised if we move higher here and the dollar peters out. And that's a bold statement looking at the price action at the open. But again, I'm going to explain in a moment. Silver. It is down. Not looking good. It opened up and it is now down. That is no bueno. We don't like that. And we have a position in silver. Now, looking at energy prices, energy got knocked for a loop last week, but you got to wonder, if jobs data was so great, why wouldn't oil rally? It's rallying at current off of the lows of last week, but last week was a brutal week for oil. It gained no bid. In fact, it lost value in light of the jobs data. Now, looking at nat gas, I'm becoming more constructive on lately, and it's up 2%. I think this can go up a lot higher. Nat gas has been annihilated. Now, sticking with the commodities theme for a moment, again, folks, you had the jobs data came out on Friday. Gangbusters, couldn't be better. They even revised up the last report. My God, it was a great, great report, right? Wrong. I'll go to it in a moment. Why didn't copper rally? Here's a weekly chart of copper. With all of this growth, why wouldn't energy rally? Why wouldn't copper rally? Dr. Copper, a signal of economic growth. It was down on the week. Sticking with the commodity trade here, we're going to go into agriculture and, of course, cattle. And corn prices on a weekly time frame, still in a bear market. They're up at current, but they're in a downtrend, no doubt about it. Soybeans fell out of bed last week. It was trying to consolidate, failed. It was rejected the week before last week, and continuation breakdown. And we now have a very oversold stochastic, but that could stay oversold. These are commodities. You don't want to go catching a falling knife here. They'll rip your face off. Wheat prices trying to consolidate here. You're seeing a Bollinger Band squeeze on a weekly chart. And I think, oh, we didn't go to live cattle. And live cattle is rallying back. Strong week last week. It's had 1, 2, 3, 4, 5, 6 straight up weeks. No new higher high, no new all-time high yet on cattle. But they're trying to cull hundreds of thousands of head of cattle over in Ireland. The farmers are flipping out over there, ranchers, I should say, flipping out over there, protesting. So there's certainly inflation is alive and well in the protein market. Let's get to the week ahead. So if nobody saw this, this is only going to take a minute to play. I put this together earlier. IBD top 20 stocks in less than a minute. ANET buy on a continuation breakout. ASML buy continuation breakout. Axon continuation breakout. Beautiful setup there. CrowdStrike continuation breakout this coming week. Datadog possible pullback retest. I should say that this is the IBD top 20 stocks going into the new trading week and my ideas about them. The gap at 130. Deckers, watch for a pullback here, higher low. I think it goes higher longer term. Same deal, DT, FTNT. Watch for continuation breakout, perhaps a little bit more consolidation. INTU, Intuit, setting up breakout. Lululemon, watch for a failure here, probably a dead cat bounce. Weak stock. AMH, possible higher high. Meta, we are short of this stock using a call spread. I would not short the common stock, could still go higher longer term. Netflix, watch for continuation breakout here. Now, continuation breakout. NVIDIA, continuation breakout. Palo Alto Networks, very bullish on it. We have traded it. We will be long again. PINS, PINS, watch for continuation breakout. SNPS, watch for continuation breakout. Workday, watch for continuation breakout. ZS, continuation breakout. Subscribe for more. Okay, so I'm going to try to put that together each week. Hope somebody got some value out of it. Economic data coming out this week. We have on the 5th, S&P Services PMI. This is a revision. It's nothing. But at 10 a.m., you're going to get ISM Services. Now, this is important. We have been in manufacturing, the ISM Manufacturing, Institute for Supply Management Survey, in a recession for over a year now. Any read above 50 on both the services and manufacturing is a sign of expansion. A read below 50 is a sign of contraction. Manufacturing has been below 50 for, again, over a year now. ISM Services has been holding on by a thread. Watch this number. If you see this number slip down below 49, what you're going to see is the expectation of a rate cut by the Federal Reserve go from, God damn it, you got to be kidding me. I swap windows all the time, and you're going to bust my chops now. Here it is. Go from where we are at current. This can't be right. Oh, no, it is right. This is right. We're only at 20% probability of an ease now. This was above 80 at one point. Now only 20%. You're going to see this number skyrocket if this number comes out below 50. Watch this number. We have Fed heads coming out. Look at all these Fed heads. All they're doing when they come out is they're grooming the market. That's all they're doing. Wednesday, trade deficit. Nobody cares anymore about the deficits. Nobody cares until it matters. Initial jobless claims, we get that each week. So it's a fairly light week. We do get CPI, but I think that's a revision. That's a revision. Yeah, this is a fairly light week in terms of economic data. So in a week like this, where you have, other than the ISM Services Index coming out, I think that's again tomorrow. Yeah, tomorrow. Unless these Fed heads have something stupid to say, then the market should continue their trend up higher. Earnings are still coming out this week. We'll talk about that in a moment, but it's not as hot and heavy an earnings week as it was last week. So I think the stocks that did well last week will continue to do well this week. Those stocks that went over in the IBD top 20, those are the stocks I'm going to be looking at to get long of this week. Number one out there is going to be Palo Alto Networks, perhaps CrowdStrike. I like those names very, very much. So the charts are great. Fundamentals are greater. Now, taking a look at the Schiller PE ratio going into the new trading week, we were at a 33 handle this time last week. Now we're higher. You would have thought that with all the great earnings data that came out last week, this would have pulled back. It did not. It only went up. Why? Because the markets went up. Now, what happened to the PE ratio on a forward-looking basis? Is it cheap? No, because take a look at this. The forward 12-month, this is a projection. This is not real. This is real. This is reported earnings. This is the PE ratio. This is a projection of what may be. So the forward 12-month PE ratio on the S&P 500 of 20 is above the 5-year average of 18.9 and above the 10-year average of 17.6. So on a rear view mirror looking basis, equities are expensive. On a forward looking projected basis, equities are expensive. Does that mean stocks crash on Monday? No, they're probably going up. Right? Well, all we're going to do here is we don't want to get lost in the hype of the market. You have Dave Portnoy. I like his show in the morning on Twitter. Davey Day Trader, whatever he calls it. I get entertained by it, but it's kind of it's a contrarian indicator that, okay, he's back doing this again. The last time he did this was in 2021. Stocks are going nowhere but up. A lot of hot money came into the market. Then all of a sudden, 2022, the rug was pulled out. And where did he go? He was gone. Now he's back. So these are just all indicators coming back to us, letting us know that there is a lot of hype and bullishness in the market, not overly optimistic where it can't go up any higher. I think it can go up higher, but this too shall end. We will see an end of the music, and somebody's going to be left without a chair. And that game of musical chairs is going to hurt a lot of people. So just be forewarned, this is an expensive market. Forget about the price action you saw last week on the great earnings of this company and that company. Stocks are expensive. Now, really quick, out of the EU. This is over at the EU headquarters in The Hague. This was fairly peaceful the other day. It's not looking as peaceful anymore. But on a positive note, there appears to have been some headway by the farmers negotiating some sort of a deal over in France caves to farmers. I'm not going to go into this, but it looks as though the farmers got some concession out of the government there. Is it enough? It was enough to send the farmers home. So, a prayer to them. Hopefully all these farmers, of all things, think about the insanity of it all. The last people in the world you would want to declare war on if you're a government should be your farmers. Think about the insanity of it all. But these are the guys in charge. Okay, so this is about the jobs data that came out on Friday. And he saved me a lot of time because I was going to dig down into this report, but he did a really good job of summarizing that jobs data and putting it into context. Go.
The jobs report is out and they're bragging about how good they did. Except here's how they lie to you with numbers. Last year, they reported month-over-month job increases of 2.7 million. but then came back later and said, we really overestimated by 650,000. It was really only 2.1. In the month of June alone, they reported 209,000 jobs, and then came back and said, we actually doubled it. It was only 105,000. Sorry. In November, they reported 199,000 new jobs, but failed to include the fact that 47,000 of those were auto workers who had gone on strike, came back to work, and they recorded it as a new job. 50,000 of those were government jobs, and 36,000 were only part-time. That means the net job increase, about 60,000. That's called lying with numbers. They do that so that they can keep interest rates high, keep driving inflation up, which causes higher taxes, which brings in more revenue. They're taking more of your money by lying to you. That's how it's done.
Okay, so what we should expect to see next month is a revision on these numbers. Don't forget, why would they lie? It's an election year. It's election year. Bidenomics is supposed to be the greatest thing. The mainstream media is going to talk to you about it all day long as being the greatest thing since sliced bread. The problem is it's based upon a lie. The BLS numbers that came out on Bureau of Labor and Statistics that came out on Friday is a statistical guess. It's a guess at what job. This is why they have to revise it so many times. It's not a real number. They guess at what the numbers are. It's not reality. That's why you get the establishment survey. That's what the report was released on Friday. That's the establishment survey. Then there's another report that's out there that's called the household survey. And that is a true survey. It's a true feel for jobs created. And there, ever since Biden got into office, you've had the establishment survey, which is the one they report. The media takes it and runs. It's going like this: job growth galore, right? Then you have the household survey, which is seeing job decreases, or at least much less than what the establishment survey is reporting. There's a disconnect. So just understand that these numbers that we're being fed are artificial. And I feel it in my gut. I went out, I saw them destroy the gold miners on on Friday. I said, you know what? I got to be part of it. I got to add more here. I'm calling BS here. And we added more gold mining stocks on that bloodbath of a Friday. At some point in time, the markets are going to see through this, and we'll get a rally in those names. So whenever there's blood in the streets, we're stepping in, we're picking up shares. Now, looking at earnings coming out this week, it begins hot and heavy tomorrow morning. Usually Mondays are a quiet day, but in the pre-market, we're going to get Caterpillar, McDonald's, after hours, Palantir, Rambus. Watch that. That stock is on fire right now. Eli Lilly on Tuesday morning, Spotify, BP, another energy play. Energy stocks reported on Friday. ExxonMobil, Chevron last Friday. Snap, Enphase, Ford, Chipotle. I will not be trading that stock on earnings. Alibaba on Wednesday morning. Uber, PayPal after hours. Disney. I hope Disney gets annihilated because I want to start buying Disney stock because you have some outside influences now coming in and trying to take control of Disney's board. It's a brand that cannot die. So if they right this ship, get rid of Bob Iger, all those woke morons over there, and they get the proper management in there, that brand will come back to life, and that'll be a 10-bagger over the next couple of years. So I'm very confident in that play, but management has to go. So I like the activism that we're seeing there. I'll be a buyer on a bloodbath of an earnings report, which I fingers crossed they get, and we'll be involved with it. Annaly, that's a big dividend player. Thursday, before the bell, more energy stocks. I own Philip Morris. That's coming out on Thursday. Funny how they didn't change that logo to Altria Group. I prefer Philip Morris by far. Spirit Air, that should be interesting. That stock has been destroyed of late. Lincoln Financial, that's one of the regional banks. Watch out for that one. They have exposure to commercial real estate. A firm that's buy now, pay later. Watch that stock. That's going to be the health of the consumer. Watch that very, very closely. Cloudflare, Expedia, PepsiCo after the bell, Canopy Growth. That stock started to come back to life. I may go over that in a little while. The monthly chart was looking good when I started looking at it a couple of weeks ago. So those are the stocks that are reporting. Just something to keep an eye on. Suez Canal is responsible for 12 to 15% of global trade, but amid geopolitical tensions, traffic has dropped by 50%. To make things worse, freight rates have been rising aggressively. This is a major risk to disinflation narrative. Very, very true. So all of these ships not going through the Suez Canal, guess where they're going? They're going around the Cape of Good Hope, the south of Africa. So very, very expensive to do. It's going to cost a lot in terms of additional shipping costs, and the ripple effect and impact on the supply chain is going to be measurable. So this is inflationary, not deflationary. China equities. Watch this one. I want to go over FXI really quick here. This is the large cap Chinese stocks. I mentioned this a couple of weeks ago that these stocks were getting really beaten up. And while I believe that China is uninvestable for many different reasons, but I will put on a speculative bet. I'll buy a call spread, betting that we'll get a rally on the Chinese stocks. I'll know exactly my max loss up front on that trade. I'll know my max profit, but I'll also know my max loss on the trade. So I'll be able to manage the trade. Very oversold here. No follow through on the prior week's bullish reversal bar. That's when the Chinese government began bailing out the equity markets. So let's see what happens in the next couple of trading days. Let's go to a daily chart, and we'll see if we have a setup forming here. No new weekly low or low. We may be putting in a higher low on the Chinese stocks. Members, more to come on this. Possible long trade on FXI. Could be simultaneous sale of a call spread and the simultaneous purchase of a call spread. If anybody wants me to go over how to put that trade on, let me know, and we will go over it in a moment. Let's go over the concentration of stocks in the Russell 1000. Don't confuse this with the Russell 2000. Those are your small caps. These are your larger cap names. And here, in fact, as of May 31st, 2023, this probably hasn't changed all that much. These are the top holdings of the Russell 1000. So you get a feel for what these stocks or what this composite holds. And you can see that the top 10 stocks in the Russell 1000 now account for 31.3% of all the index, the highest level in history. So a lot of concentration of performance in these names are limited to only a few stocks. And you know the culprits here. It's not Apple, Microsoft, Nvidia, Meta, no doubt about it. Not so much Apple and Tesla. They've been laggards. Amazon hasn't broken out to a new higher high. I am liking Amazon into the new trading week, though. So now let's talk about Meta, and we'll talk about Amazon. It's not Amazon, Tesla. Possible trades here. So here is the trade that I proposed on Thursday night Stock Charts Live, and I was trying to illustrate at that point in time what we would have brought in terms of a trade where we would have sold an out of the money call strike, or this is actually an example of a trade that we could put on. We didn't put this one on, but I wanted to pretend as if this was a potential trade that we would have put on going into earnings to show you the risks involved here, because I priced this out to do this trade. I walked away from the trade because it was too much risk, not enough reward. I'm glad I walked away. I could have still made a profit, but I'm glad I walked away. And this is very similar to the trade that I would have put on. And I would have been paid about $1.51 by going out 43 days, which is a pretty good distance out in time to put on an earnings trade. Usually you go out, you know, front week or 2 weeks out, because that's where all the speculators have bought up the options, making those premiums so expensive. And the next day, even if they're right on the trade and the stock goes up higher, the premiums and the options evaporate anyway because they were overpriced. So a lot of it's driven by speculators. So what I would have done is gone out 43 days, less of this IV expansion, but he would have had a little bit. So I would have sold a call spread, and to be fair, I would have sold a put spread as well to balance it out. So in this case here, I would have generated a credit of $1.51. That would have been $1.51 put into my account, and I would have had to hope for the best that Meta did not outperform expectations. Okay, so now let's take a look at what this price would be had I executed on that trade. Here is the same trade. I would have gotten paid $1.51. Now that option is worth $6.70. That would be a real bite out of my butt in terms of capital being eaten away, besides the fact that it would also be in the money. So while I believe that the shares would pull back and I'll be able to roll this trade out and ultimately make money on the trade, between now and options expiration and the time it would take for Meta to correct, this is a tremendous amount of capital tied up in one trade, and it reduces my ability to put on other trades, or would have reduced. So the route that we chose was to put on a call spread after they reported earnings, and I'll go over that trade and what we did as well. Now, take note of the loss of $6.70 that we'd be sitting with versus that $1.51 credit that we would have taken in. That's a pretty big loss that we're sitting on. Ultimately, we could have made it profitable, but again, you're losing a lot of capital. I wouldn't have taken a loss here in reality, but again, opportunity lost by not having too much capital tied up in one trade and not being able to do other trades. It would have been very, very aggravating to manage. Now, let's pretend for a moment that I only put on a strangle. What's a strangle? Well, let's pretend that I didn't buy the insurance, right? I didn't buy the option to protect my call strike. This would have been my loss. I would have taken in a credit of what? A credit on the call, sell to open, 450 call, $3.83. That trade now would be worth $34.93. If I would probably have blown up my account. I would certainly have a margin call. And this is one of the primary reasons why I don't trade earnings as much as I used to, because I've been there. I've gotten bitten before, but you can get bitten, you can learn from it, or you can continue to get bitten until you're out of business. So that's not the game I like to play. So if you're going to trade earnings, it's okay. Just make sure that your IV rank is above 70, 80. You want it to be very, very expensive so you can get far away in terms of hitting strikes that are very, very improbable from hitting. This stock here did almost a 3 standard deviation move to the upside, which is very rare to see. Very, very rare to see in one day. Chipotle Mexican Grill tortured me in the March quarter of last year on only 2 contracts. It just wouldn't stop going up. So be careful with earnings, okay? Now, we did ultimately put on a trade on Friday, but as I mentioned on Thursday Night Stock Charts Live, we're going to wait for the stock to get done going up as much as possible. Now, by and large, Friday's price action, you can see the gap up here, a massive move, up over 20%. In the after hours session on Thursday, it was up 14%. I could have shorted it then, but remember I mentioned that this stock can continue up higher. In all probability, it will. When it opens up for trade 4 a.m. to the institutions, they will probably bid this stock up higher. And they did. They bid it up $10 from the close of after hours trade on Thursday night, up $10 at the open of 4 a.m. trade Eastern time on Friday morning. And ultimately it closed up 20% on the day. So the trade that we put on here were two. We did two tranches of sales of Meta. And I mentioned I was going to do this on Friday. Now, the shares of Meta closed out the day at 474.95, 477.99. So what we did is I went, there's no way I could have put this trade on before earnings. There was no premium up here. Now there's plenty of premium because of the move higher by 20% in a single day. So what we did is we sold, and this is the large account, sold 15 contracts, 530 strike, and I bought insurance at the 545 strike just in case the stock continues up higher. We're profitable on this trade right now. I could have booked profits on Friday before the close, but I think there's money to be made here still, and I'm going to share with you what the game plan is moving forward in a moment. Now, in our smaller account, we put on a smaller position, but more conservative strikes. We sold to open the 540 strike, and we're up on this trade as well. So we did a lot of selling of call options on Friday in both accounts. We're profitable on both. That doesn't mean I'm going to be profitable by tomorrow. It could still move up higher, right? But I'm very confident in the trade because A, we showed discipline. We bought insurance. We went deep out of the money. And you can see here that the delta is here. Again, a delta is the percentage move. In this case here, we sold a 12 delta. That stock at current, or this option at current, will only move 12 cents in either direction with every dollar move of Meta. So it's not a very, very aggressive trade. It's a very conservative way of shorting the stock right now, taking advantage of what we believe to be a very overbought condition on the share price. Take note of where we are on RSI, 86.48. We are trading above the third standard deviation Bollinger Band. So what's the shot here? What's the game plan? Well, the game plan here is that while the stock may just continue up higher, we could easily see the stock move up higher on Monday. What I plan on doing is as the shares begin to top out and show me topping action, what does a topping action look like? Well, once you start seeing wicks, shadows, call them cupcakes, call them whatever you like, on top of these candlesticks, and you see volume decline to below average, and then you see a bearish key reversal bar, then we're probably going to begin taking, if we still have profits in Meta, we're going to take some of those profits off the table, and then we're going to go from a defined risk trade to more of an undefined risk. Actually, it is a defined risk. We're going to, rather than going and selling the call options, we're now going to begin buying the put options on a bet that they're going to go lower. The max I'm going to be able to make on my trades right now, the two trades in combination, is probably $3,000, around there. Not a huge amount. But as we begin to see these shares begin to peter out, become more and more overbought, then we become more confident that we're going to get a correction in Meta. Then I'm going to buy the put options. And then the sky's the limit in terms of profitability. We're going to be able to make a lot more to the downside. but I'm not ready to pull that trigger yet. I'm still concerned that we have very little in terms of economic data coming out this week, except for services PMI. If that comes out weak, I fully expect equities to move up higher because expectations for a rate cut will go up. So that's the game plan with Meta. I believe that it can continue up higher, but it's going to correct very, very soon. One stock, and I didn't think about it until one of our members mentioned it. It was Talon on Friday. He was talking about potentially buying some call options on Tesla, and it was down by the lows of the day. And I said, you know what? I think you'd be better off, waiting to see whether or not we get a reversal here on the day. And if it closes up higher, then I'd probably be along with you on the trade. Now, the stock didn't close higher on the day. The however is it closed well off the lows of the day. So this is a stock that is interesting to me. At some point in time, it's going to get a short squeeze. I think they're putting in a higher low. What I'm going to be watching for here is a breakout on Tesla. And maybe, we already have a trade on here. We have what you call a strangle on, and we're just collecting premium each day on Tesla stock. But we may put on a long trade on Tesla as well. Maybe buy a call spread and get long using options as well, or just buy the common stock, sell covered calls, whatever. 6 of one, half dozen of the other. So those are the trades that we're going to be looking to put on. Let's do some chart requests. Bob, my new trading strategy is to take the opposite side of whatever my own technical analysis tells me. That's the George Costanza way of trading. I know how you feel sometimes. Something has to work. Jody, the government never administrates food production or distribution well. No, they never do. Failure is usually at everything. The FXI overview, please. You got it, pal. Agreed. Well, I think it has more upside. We don't bet on it yet, not going up higher. They could still squeeze the shorts here. So there's probably still a little bit more fuel left in the tank. If it pulls back tomorrow, I wouldn't be shocked. If it goes up tomorrow, I wouldn't be shocked. So I'm in no rush to go adding more short here. I have a big enough position at current. Hey, Franklin. US 30. I'm not sure what that is, pal, but okay. Walmart seems to be okay. Meta, SMC due for profit day. Yeah, SMCI. I want to go over that because I'm thinking about putting a short trade on SMCI. I love the company. Don't get me. I don't love Meta. I can't stand Mark Zuckerberg, but I love the stock. But we're short of it, right? So let me get my pen and paper out here so I don't forget to go over anybody's stock charts. And let's I go to the members area. They pay the bills. Andrew, CVX, Railroad. Transports looked beautiful last week. Okay, so we have, let's go back. Walmart. Meta we did already. SMCI I want to go over. SBUX, they reported. They were up. I don't know how they closed. AIQ. Nugget. Yep, Sean. Okay, let's do it. Folks, we're going to be using TrendSpider Automated Technical Analysis. Use that link below to get at least 35% off of your membership with them. And they may even have a special deal on their website right now. So take advantage of it. 35% discount code. Use my discount code, but don't use my discount code if they give you a better discount, obviously. But use that link anyway. PLTR. Okay. All right, let's get to it. Let's check out the intraday price action on Meta. I want to go to a 30-minute chart first. You can see what they're doing here is that it found resistance. You got a lot of overhead supply here on Meta at 474.32. 15-minute view. So they may drop this at the open. I'd be looking to take some profits off the table on Meta. If they take it down to around 465 per share, I'll take some of those profits off the table. If it rallies and comes back, I'll watch it. I'm not going to reshort it quite yet, but if they continue to rally it up higher, especially if it gets up to RSI like 90 thereabouts, then I'm going to begin to buy put options. But you need to leg in. Don't go buying your entire position all at once. So I'll be doing one lot contracts and putting on a short position on Meta in anticipation of a big pullback. SMCI. I want to bring RSI up here. Let's go to the weekly view. Okay, so SMCI, what you're looking at here is a fractal trend line using fractal math. I'm not that smart, okay? I couldn't tell you what a fractal math is, but it's a very, very significant resistance level. Now, we managed to punch through it last week. The question is, does it hold it? That's the key question. I think that at a bare minimum, what you're going to get on SMCI is a retracement back down to around 540 per share. So if they open it up, I'm going to start looking to sell a call spread on SMCI. And if you want me to illustrate how to do that, let me know and I'll do that for you. But I need to have at least a couple of people saying, yeah, just want to make sure that people are interested in it. Daily chart, resistance up above. I did not draw this line. This is the automated trend line from TrendSpider. And they're telling us that the next resistance level on SMCI is 473.57. We hit this resistance level, and I am selling premium. And selling premium means I'm selling options. In this case here, I'd be shorting the stock by selling call options to call buyers who think that the stock is still going to go up, but they're probably going to be wrong. Okay, so we're good to go here on SMCI. Now, next chart up is Starbucks. Now, I haven't looked at this since Thursday evening when they reported earnings. Where's their stock price? It was down? It was acting beautifully in the after-hours session on wow, it closed down. Wow, look at that reversal. Wow. Wow, very surprising. Okay, so Starbucks is in trouble. Wow, I got to go back and check that earnings report. So we broke the lower band of support. They took it up on earnings. Sellers in here, they took advantage of that earnings report. Dumped. Starbucks, this is a sell all day long. And I'll be honest with you, I would be looking to short I would be looking to short Starbucks on a break to new weekly lower lows. Daily view. Here is our support level. I want to know if we break and close down below it. Starbucks then becomes a short. You can technically short it now, but on Thursday and Friday, you saw some bullish price action on Starbucks. Starbucks. Okay. AIQ. I'm sure you do. I like it myself. You're interested in the call spread example? All right. Is anybody else interested in how to set up that trade? All right. AIQ. Artificial technology ETF. Oh, this is a good one. What the hell's going on here? Okay, there we go. Better. All right. So very bullish. Weekly chart. Actually, no, I'm sorry. This is a daily chart. Let's go to the weekly chart first. All right. So the algorithm is telling us that we closed right at a resistance level on Friday. So let's also point out that we've been here before. We were there the week before last. I would not be a buyer of these shares until we close on a daily time frame above $32.21 per share. Because right now we're at pretty stiff resistance levels on AIQ. It's been resistance for the past 2 weeks. Normally the way this works out, and it kind of already happened in a way. Let me go to a daily chart and illustrate. Let's keep the weekly resistance levels on top of the daily chart, and there you have them. So what we need to get here is a pullback and a retest of support, and then another running start at this resistance level. You can see they dropped it back. They tried again. Not quite a big rejection yet, but they may need another pullback here and another run. On another run higher, I think that they're probably going to break through because a lot of these companies don't make money in these ETFs. Now, generally what happens in a blow-off top, I'll take you back to 2021. ARK funds, they have one of these funds as well. They had the biotech fund. They have the regular ARK fund, ARKK. What did they do in 2021? With the exception of a few names like Tesla, well, actually, a lot of those companies were making money back then because it was stay-at-home, Zoom. What's the bicycle company? Not Palantir, Paladin, something like that. They were making money, but those are all stocks that were just being goosed up because of a temporary event that was COVID, these lockdowns. And all of those stocks wouldn't ordinarily have had a run up like that absent the lockdown. Now, when those stocks start outperforming the stocks that are making a lot of money in the market, the top tier names, usually you're at a top, especially when you have the amateur money that's coming in off the bench. That's what Wall Street calls us. That's not me calling us that. They actually call us the dumb money, to be honest with you. And that's when you know you want to start eyeballing the exit door and start looking to get short. So these names can move up higher. So I have little doubt that they will. As a matter of fact, I'm looking at the wrong chart. That wasn't a daily chart. That was this makes more sense to me. We still have a lot of resistance here. So these stocks can run up higher. I think that ultimately we are going to get resolved to the upside here. A lot of these names are going to move up higher. I think the Russell 2000 eventually going to start breaking out as well. So AIQ, besides the resistance above, I'd be a buyer on a pullback here. Now Nugget, that got killed on Friday due to the jobs data. Now, on a weekly chart, I got to say, I'm not bullish, even though I added more on Friday. I think this probably gets resolved to the downside, but you got to look at it as an opportunity. If you're not looking at this pullback on these stocks as an opportunity, then you're too overweight the stock. You have too much of it. Consider lightening up, or consider, rather than buying the stock on a pullback, sell puts, and then sell calls against your position. Whether you own the stock, sell a covered call. If you're selling puts, then sell it deeper out of the money covered call and generate cash flow off of the position. Any stock in your portfolio should be generating cash flow. That's the beauty of the options market. So we'll be selling calls. We have covered calls on NUGT. We're going to continue to sell covered calls. Something just broke here. NASDAQ moving. Oh, this is a live cow. NASDAQ. Looks like NQ broke out higher. Oh, actually, no, it pulled back. Pulled back. Sorry. It's breaking down. Now we're down over a 0.25 percentage point. And you're seeing some pressure behind this. Let's go to a 1-minute chart for a moment. You're seeing some decent volume here to the sell side on the NASDAQ 100. Let's check out the E-minis. And they're following suit to the downside as well. All right. Nothing huge. So I want to be very, very bullish on Nugget. I just can't be right now. So right now, the name of the game, if you're owning these shares, is to generate cash flow, sell covered calls. And if you're too heavy, lighten up. Lighten up. The shares are probably going to go lower. You get them at a cheaper price. Now, keep in mind, though, gold is up. I want to go back to gold with the dollar being up as well. That is very bullish for the mining stocks. Have we given up? We're up fractionally. We gave up a lot of the move already on the mining stocks. What's the dollar doing? The dollar's off of its highs. I thought that this would happen. Let's just take a quick peek at the euro. And the euro's bouncing back a bit. All right, so things are beginning to stabilize here in the currency markets. All right, so Nugget, very sensitive to the U.S. dollar. That jobs data that came out on Friday, I think it was completely bogus. And if we get weak services PMI coming out on Monday, I think that could goose Nugget up higher, assuming that the expectations for a rate decrease in March skyrockets higher as well. PLTR, Palantir. I think they're one of the ones that report this week, no? Or have they already reported? No, they report on Monday. So just be forewarned. I would not trade this stock into earnings. Let's check out their anticipated market maker move. At current, the market makers are expecting a little over $2 move on the shares. Not something I would be interested in as a earnings trade. So I would definitely not trade this into earnings. The weekly chart, we're seeing a lot of consolidation here. We had a breakout that was rejected the week prior to last. MACD histogram is seeing selling pressure diminish and the share price stabilize. I'd be a buyer of the shares on a close above VWAP, which is at current, the line in blue, and at $18, and let's call it 10 cents per share. After earnings, though, not before earnings. On Friday, very, very good price action. They tried to take it down, but you saw a bullish key reversal bar. Again, one of my top 5 favorite candlestick patterns. Link below, 5-part video tutorial. Nice rally. Were it not for earnings coming out on Monday, I'd say buy on a retest of 1691 because it looks as though it wants to go up higher, but I cannot condone a buy of Palantir in advance of earnings. All right, so I'm going to stop sharing for a moment. I'm going to go over, I'll do the SMCI trade. I'm going to go over, I'm going to log back into my account here, how I would set up the call spread on SMCI, and we'll spend a moment chatting about that and answer the question. Is SMCI looking good as a potential short? Let's check it out. All right, so first thing we want to do is we want to make sure that we're going to get paid for our risk. Let me reshare my screen before I forget, which is what I do all the time. Okay, so how we gauge whether or not the premiums are nice and fat is we take a look at the IV rank. And IV rank on SMCI is at NASDAQ just moved higher. So it looks like we have a reversal on the NASDAQ. Look at that. Wow. Talk about oh, wow. That was a bear trap. They lured the bears in and they ripped it up higher. Look at that. That's a thing of beauty. Very nice. Woo. Somebody just got a whooping. All right, so back to SMCI. All right, don't short Meta no matter. He says it's strong, especially for this week. What's your logic for not shorting Meta? I agree with you. I wouldn't short the common stock right now, but I'm not saying short the common stock of Meta. I've not said that whatsoever. Would you buy the stock here? Okay, so SMCI, IV rank 40%. That's good. We like that. Some decent premium left in SMCI. So let's price it out. How do we want to structure this? Easy peasy. We want to go out as close to 45 days as possible. Why? We know that that is when time decay begins to build up 45 days or closer to expiration. We want to take advantage of that. But we don't want to get too close to the fire here. SMCI is a very, very strong stock. Strong stocks have a tendency to get stronger. Forget about the after hours price action. I wouldn't even look at that. Think about how it traded on Friday. It was down on Friday on a strong day for the equity market. That's a little bit of a tell. That being that as it may, I want to go out. I want to go into this trade expecting the stock to go higher. I want to respect it. So I want to go out. I want to sell around a 15 delta call. I don't want to do a 14. That's nice. I feel good with this. I'm going to sell a 750 call. But given that this is a very high price stock and it would have a magnified effect on our drawdown of our margin buying power, we want to put on an insurance policy. Now, this is a $10 wide. I'm going to sell to open the 750s, buy to open. So this is $10 wide. We could generate a credit of 175. Not very attractive to me. I wouldn't be able to put on a whole bunch of contracts here. So my max profit, to sell 3 contracts is 525. I'd rather go a little bit wider on the insurance. This would increase the amount of buying power I have to put up, but it would also increase the amount of premium I would collect. Now remember, I'm selling a 16 delta. This is a very, very high probability trade. The probability of the shares closing above, let's check it out. This is the 315, 750 strike. Let's check out the probability of the shares closing above that mark. Closing in the money. Here's the 15th. And here is 750 right around here. It's got about a 12% probability of trading in the money. Now, it could touch that price point. Here again, the probability of touching it is about 24%, but the probability of closing there is measurably lower. So this is a very, very high probability trade. So I would still put the insurance on, but I would put it wider than what I would normally do. I would generate a credit of $3.65. That would deposit immediately $1,095 into my account. I'd probably book profits at around 50% or 21 days to expiration and move into a new trade. So that's the trade on SMCI that I would look to put on going into the new trading week. Folks, thanks for being here. Have an awesome remainder of your Sunday. Have a profitable trading week. I'll talk to you soon. Be well. Like, subscribe.